Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Descartes Underwriting, Tanguy Touffut. Great to have you with us.
Thanks, Elliott, for inviting me.
Okay, so before we get cracking, we are going to learn a little bit more about Descartes. So if I understand correctly, Tanguy, you're an Insurtech, but with a kind of special focus on climate change and cyber risk. Is that a reasonable summary?
Exactly. We innovate in the face of climate change. So we create innovative insurance solutions to cover, for example, wildfires, floods, hailstorms, so what we call also severe convective storms, on the global basis. So we are a global company, and we launched cyber products last year. And we expect to launch more and more products beyond pure weather products in the next few years.
And how is business? I mean, we see every day headlines about the impact of extreme weather, whether it's caused by climate change or not. Of course, some people would debate. We also see news of hacking of hacks and massive cost due to cybersecurity breaches. So, would I be right in thinking that business is looking pretty good right now?
It's looking pretty good, and I don't want to be cynical. Of course, we won't be able to fix climate change anytime soon, but we try to find ways to mitigate the consequences of climate change through insurance products. If we look at some numbers, about 10, 15 years ago, the losses related to natural catastrophes in the world were well below 50 billion. Last year, it was well above 150, and we expect that number to double in the next 10 to 15 years. So we see a sharp increase in the frequency of weather anomalies. And on top of that, unfortunately, there are more and more assets in cat-prone areas, so typically in Florida or in Texas. So we see a combination of more demand, of course, and a higher level of risk overall.
And are these kind of, I suppose, relatively new areas? Do they lend themselves to having an Insurtech kind of deal with them rather than a traditional insurance company? I mean, I know insurers generally kind of reinsure with big reinsurers and the like, but is this not something that, big traditional insurers, I think you used to work at AXA, for example, might be able to kind of handle themselves? Why did it require a new kind of name in town?
So basically, as you said, we are operating in areas that are very risky, and some insurers are trying to exit. For example, wildfire in California, there were massive losses in January 2025 in LA. Probably around 40 billion insured losses, and if we look at economic losses, probably above 250 billion. So reinsurers and insurers try to reduce the exposure. In our case, we are trying to deploy capital in such environments. But to do that, to achieve that, we need basically to build new models that will better understand what's happening with climate change. So most insurers are looking at historical data. They don't have a forward-looking view of climate change. In our case, we use physics. So we have a team of more than 150 data scientists, software engineers, PhDs, focusing on modeling climate change. And these people are really, working very hard to better assess what's happening right now with climate change. So instead of looking at, for example, wildfires over the last 50 years and using like three data points and try to build like a statistical approach, we really try to model the underlying drivers like heat wave, soil moisture, wind shear. So 50 different parameters to be able to make sure that we better understand what's happening right now with the climate change. So we can secure much more capacity from the reinsurance industry and also asset managers to be able to cope with the demand.
And you're a relatively new business. I think been going for some 6 years or something. Are you profitable already?
Descartes Insurance, our own risk carrier, was profitable last year. But the holding is investing. So we raised 140 million USD through a seed, a Series A and a Series B. And the plan is more to focus on growth, so disciplined growth, but to focus on growth. So we will keep on investing in the next 5 years, definitely.
And I mean, you just mentioned some of the funds that you've raised. Does that mean that you're good for now, or do you plan to raise some more in the near future?
We are good for now. Of course, we may be open to selective acquisitions. So we may use some of the funds we have in our bank accounts to finance M&A. And if we are looking at relatively large acquisitions, we may need to raise for more money. But based on our current, I would say, investments, we are fine for forever.
And I mean, just finally, I mean, we mentioned this at the beginning that obviously, as the planet gets warmer, we are seeing more extreme weather events. I mean, just in April, we saw a massive power outage in Spain and Portugal. It seems because of higher temperatures and various things kind of going on there. In the UK, also in April, there was a massive cyber attack against Marks and Spencer, one of the biggest retailers here. I mean, when these kind of things happen, I mean, I don't know if you're specifically covered people that were exposed to these kind of risks, but when these big things happen, that presumably means you have to pay out, and that's not great for you. If these things are happening more frequently, I appreciate you're probably charging a premium that reflects the increased risk, but it must be a very tough balancing act.
Yeah, the purpose of the insurance industry is really to pay claims. Now you have to make sure that you are paying less claims than the premiums that you can collect. So this is something that we achieve through a better modeling than our peers. And sometimes the rates or the prices could not, I would say, be reached, and in that case, we have to walk away from some periods in some geographies. But overall, we don't want to be afraid of taking risks, because it's clearly why insurers have been created in the past, and we need to deliver basically solutions again in the face of climate change.
Fascinating how technology has enabled insurance, one of the oldest industries, to kind of be at the forefront of technological developments. But look, we've heard a bit now about Descartes. Let's now learn more about Tanguy. And I mean, look, fintech in general, including Insurtech, I guess, has been on a bit of a roller coaster over the past few years. I mean, there must have been some days, maybe every day's been perfect and brilliant for you guys, but there must be some days when you kind of come in and, you're running this company and things are just incredibly tough, whether it's in terms of growing the business or raising the funds or other things like that. I mean, do you enjoy every day, or are there days when you kind of, wish you stayed in bed?
There is, of course, a nice expression in the entrepreneurial world, saying that creating a company is like chewing glass, and it's true that you need to love the taste of your blood to feel happy in this world. No, I think we have a purpose. So of course, having a purpose is something that, and a noble purpose that keeps you awake. And gives meaning to your life. So I don't want to complain. Of course, we have challenges. When you grow a company, you need to, to keep a low profile and be humble. You have to change basically the way you work almost on a monthly basis. When you're a team of 3 people, 10 people, 50 people, 200 people, it's a different way of working. And of course, it means additional processes, additional, I would say, a new governance. So this is something that makes you feel uncomfortable from time to time. The fact that you can't just stop growing, you have to keep on moving and keeping on innovating, which is definitely a stretch.
And I guess you have to go around and overcome many obstacles along the way, which, if I'm not mistaken, is something you used to do when you were France's national canoe champion. Maybe you can tell us a bit
Uh,
about that?
I was not, I would say, such a champion. I was more like at the regional level. But no, I've been playing rugby a lot as a teenager in the regional team. I loved canoe or kayak quite a lot too, for different reasons. While rugby, it's obvious. It's a team. It's about the team and combining the strengths of different people, making sure that again you dare to to move in the face of adversity. So there are plenty of great lessons you can draw from being a rugby player. For canoe or kayak, it's a different story. It's a great contact with nature and a way to take a step back and relax a bit more. Of course, with some physical, I would say, stretch, but overall, it's not the same, I would say, context and environment compared to rugby.
I guess you get the combination with the rugby of being a team player and also as a kayaker or a canoeist, being the kind of individual that kind of tries to get out in front of everyone else. But I guess we shouldn't read too much into the things that you used to do as a teenager. But good to have hobbies, of course. So look, Tanguy, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Tanguy Touffut, co-founder and CEO of Descartes Underwriting. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now, Tanguy, let's talk about the future of finance. So first up, just a very quick one on President Trump and his tariffs, because of course we know that things could change before we've even finished this interview, let alone by the time this interview actually plays out. But generally speaking, there's obviously a lot of uncertainty. People don't necessarily know where things are going to go, whether it's with tariffs or trade or various geopolitical tensions. How does all this uncertainty affect Insurtechs, insurance companies? Is it good? Is it bad? Or is it just, a question of waiting and see what happens?
Well, I think insurance companies are not immune to the global economy, and it's true that the lack of visibility and the increased uncertainty will lead plenty of large corporations to stop investing as much as they expected to do a year ago. So we can see some anxiety, and it is perceived, of course, in the financial markets, but also in the fact that the way the world was organized until recently won't last for long. So there would be new alliances and new growth areas. So this won't be a good market environment. But for us, again, when we launched the company back in 2019, we were not expecting to face COVID-19. So I think it's more business as usual. Living through uncertainty, living through different hits is part of our DNA. We are insurers, so being an insurer means that we are anyway very fact-based, but also very honest about all the challenges we may go through. As I said, we opted for the most volatile perils when we decided to go for climate change and cyber. So nothing would stop us in the end. But having some more tailwinds instead of headwinds would be, of course, a pleasure.
I mean, would Trump insurance kind of count as a parametric kind of insurance policy? Do you think that that's something that people might be able to take out?
It's very difficult to model what may happen next, and unfortunately, some actions that may be implemented even if they decide to cancel some of the policies, the trust and the confidence in the system may be hurt. So the only thing that we can model is that the economic assumptions for 2025 looks less appealing compared to even 3-4 months ago, like beginning of January compared to April or May. It could even deteriorate. We may have some good news too. But yeah, clearly there is no way to model the economic policy of Trump right now. So we have to be prepared for all scenarios, and it's going to be fine anyway.
Okay. Well, look, one thing that's unlikely to change is that we've seen climate change move down the list of priorities in many places, especially in the United States. I mean, in the UK, in April, former Prime Minister Tony Blair was calling for net zero policies to be changed as well. Is this good or bad news for insurtechs and insurers that issue policies against climate risk?
I think all insurers know that climate change is one of the top 2, top 3 challenges they are facing in the next 30 to 50 years. I'm talking about non-life insurers, property or P&C insurers. Even for health insurers, climate change will have an impact on the health of many people on the planet. So clearly, there is no body being skeptical about climate change in our industry. I think we all need to find ways to, reduce our emissions. I think I'm quite proud of what's happening in the insurance industry because we have different ways to act. We are clearly investing a lot in new infrastructures. So insurers, even more than banks, are able to allocate some of the investments to renewable energy, for example, or to innovative infrastructures, for example, in Africa. So we have this lever, which is quite powerful. And on top of that, we can decide, for example, not to insure some industries. So in our case, it's a no-brainer. We can't insure coal plants because it's completely, I would say, unaligned with our purpose.
And I mean, you talked earlier, I think you said you've got 150 data scientists working for you. Obviously, you're in an industry where there are behemoths, with, hundreds of billions of dollars, if not trillions, under management, and, that have been insuring for, a century or longer. So how hard is it to kind of write these policies for climate, cyber, other emerging risks, which haven't got a huge amount of track record and which others maybe are shunning? I'm just wondering how, insurtechs like yourself would go about this, with 150 data scientists when, another big insurer could presumably afford to hire thousands of data scientists, and presumably might be able to come up with models that are just as good as yours or better.
Yes, so we of course invest in our models, and many insurers actually decided to use external providers, and they don't invest in modeling skills anymore. Um, it's very difficult for incumbent large traditional insurance companies to attract tech profiles. Like the best software engineers uh, love to work in a climate tech. They are probably less attracted by traditional insurance companies. So we clearly benefit from great talents because of that. We can use also, we are nimble and agile. So it's very easy for us to, for example, be very good at using convolutional neural networks. I don't see any large insurer being that advanced. And on top of that, we are using a parametric insurance approach. So we design very innovative products to be able to pay claims within a few days versus 550 days in average in the US for the corporate segment. We are trying also to use external data to trigger the payouts. So we have very simple wordings. That's something that, of course, is a big issue in the insurance industry. Most contracts are very complex with plenty of small prints. In our case, it's very simple. We use satellite imagery, we use radars, we use sonars, but we're able to basically have a very simple mechanism to trigger a claim payment, and we're able to reduce also the expenses. it's a big challenge of our industry. Most large insurers will have about 30% frictional costs, and this is something that is clearly not at all in the favor of the end clients or the brokers. So we are working also to make it leaner.
Okay. And look, I mean, insurance and actuaries in particular are often thought of as being kind of the first data scientists, you know, however many hundreds of years ago they started out life. Would it be fair to assume, therefore, that the sector is or has embraced artificial intelligence with gusto, or does it depend on the size of the company, the type of company, the country where it's in?
I think it's still value at early stage. It depends on the AI technology you have in mind. If you're talking about Gen AI, it's relatively new. It works well with unstructured data. Some insurers are innovating quite nicely. But if we look at, for example, neural networks or other types of technologies, I don't see so many applications. So I think it's a long-term trend. It will take many more years before we start using in our industry AI in a smart way.
But I mean, in future, you know, you wouldn't need your data scientist. You'll just feed in the policy, and it'll give you the kind of right answer for how much of a premium you should charge for a particular risk, for example.
I think we are very far from reaching that's say a level of sophistication. Maybe in 15, 20 years, this is something that may happen. But in the meantime, I think there are plenty of data sources that need to be leveraged. There are plenty of technologies that should be integrated both in the product design and the pricing. So we are far from being in a situation where everything would be fully automated with the most advanced pricing solutions that may exist right now. So it's still a very long and painful process.
Well, I'm sure the actuaries will be relieved to know that they don't have to worry about their jobs for 15, 20 years. But look, London has, of course, always been an insurance hub with Lloyd's of London, then a fintech hub. I mean, you're headquartered in Paris, if I'm not mistaken, but you've got offices, I think, in 18 cities, including London. Which kind of jurisdictions, and I guess things are different in every jurisdiction, but which kind of jurisdictions would you say has the most progressive conditions to foster success in insurtechs?
It's a very complex question because there are some countries that may be quite advanced in insurtech, like China. They have a number of very sophisticated players, and they are using very, I would say, disruptive technologies to address needs, for example, through WeChat. Um, I think Europe is a bit lagging behind. We know that the regulatory environment is less inclined for innovation compared to the US. At the same time, we have plenty of smart people trying to find innovative solutions in Europe. So, depending on the line of business, depending on the segment, we can see many successes in the US, in the UK, in Western Europe. So, um, but yeah, for example, China is more advanced than Europe in on many dimensions.
Okay. All right. So look, Tanguy, it's time now for our round of rapid fire questions. Are you ready? Okay, great. So I've got 90 seconds on the clock. I'm going to ask you a bunch of questions, just looking for one-word answers. And we're going to try and get through as many of them as possible before the time runs out. Okay, here we go. So what fintech segment, in your view, has the biggest potential over the next 5 years?
I believe corporate insurance is very
Okay,
conservative and touched.
just one-word answers, Tanguy. Otherwise, we
Okay.
won't get through them all. What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Claims.
Are bank bosses ready for the AI revolution?
Not yet.
I guess I should ask you, are insurance bosses ready for the AI revolution?
Not all of them.
Do you think regulations in the EU and the US have kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
No.
Have you personally ever invested in crypto?
No.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
Depends on the geography.
Okay. On a scale of 1 to 10, 1 being the lowest, 10 the highest, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? So between 1 and 10.
9.
CBDC, central bank digital currencies, will become a mainstream reality in Europe and the US?
If you add Europe, no.
That you'll be able to open a crypto account at a top-tier bank?
Yes.
Sorry, that's out of 10.
9.
That SWIFT will still be the main... Well, I've started that question, so I'll finish it. That SWIFT will still be the main tool used for transferring money around the world.
5.
Okay, 5. Interesting. All right. Well, I'm afraid that's all we have time for our round of rapid fire questions. And that's all we have time for our conversation. So I really just want to thank you, Tanguy Touffut, co-founder and CEO of Descartes Underwriting, for taking the time to speak with me today. Thank you so much.
Thank you, Elliott.
Okay, and for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.